Fill it up with enough money and it's going to bulge out somewhere. Sometimes this is consumer prices or stock market prices, but in the case of China, it's clearly been real estate prices. Unfortunately, this is not a particularly productive asset class. If the housing bubble continues to wobble or general inflation takes hold, China could be in a lot of trouble. A debt burden that large, even if it is owned by internal state-controlled banks, is always going to be unwieldy. But there is probably a bigger takeaway in all of this, and that is that the Chinese economy is incredibly weird. We've been comparing figures to the USA as the most logical peer, but in reality, it just functions completely differently. The USA has a private sector that's underregulated with too much capital being thrown around. China is overregulated with the government really pushing out most natural development. The USA overconsumes, China underconsumes. The USA has had problems with stubborn inflation, China deflation. And yeah, when it comes to debt, the situation isn't as adversarial as it would look on the surface. China may buy a lot of US debt, but it has a lot of its own that it's buying from itself. A real falling out between these two economies wouldn't have a winner and a loser, it would just have losers. It is easy to look at current global events and conclude that this is China's time to shine because the USA is making so many missteps. But that's also unfair. China has just as many, if not more problems than the USA. They're just a lot better at keeping it to themselves. Now, one of the root causes of this weirdness is of course the government itself, or rather the party. But even that is widely misunderstood, and we've made an entire video on the hierarchy of the CCP to see who has control over what on our new channel Context Matters.